Laura Radulovich with Keller Williams Classic Properties, and today I'm with Jason Harris from Guaranteed Rate. Thanks, Jason, for joining me.
Oh, Laura, hey, I appreciate you having me on.
Yeah, I know the topic that is all over the news and all over any buyer right now is regarding interest rates and what in the world they are doing right now. So I'm just going to let you get into it. But first, tell me a little bit about your background and why you are the expert on this right now and why I came to you.
Yeah, Laura, absolutely. I've been a mortgage lender here in Columbus for about 18 years now. I work with Guaranteed Rate, and so obviously interest rates are a hot topic of late. You know, we've seen over the last 4 months or so, since about the beginning of January, we've seen, you know, interest rates starting to move north, starting to head higher. There's been a lot in the news recently about the Federal Reserve raising interest rates. And so, you know, we experienced a time during 2020 and with all that was going on with COVID and really into 2021, where the Federal Reserve took steps that were very unusual to drive interest rates down as low as they had ever been. So, you know, at least in my 18 years in the business, and I think if we look back even farther, and you know, it worked. We saw, in spite of basically our economy coming to an absolute halt, if everybody can remember back to, you know, March and April of 2020, their goal with pushing rates down in the way that they did was to avoid any major recession or really a major depression. And so they've accomplished that goal, but, you know, now it's time to, you know, to kind of move things back in a more normal direction. And so we've seen, you know, everybody's seen gas prices and food prices and, you know, really prices of homes and everything in general have been moving higher at a really unusual pace over the last couple of years. And so, you know, the goal when you think about interest rates is really just to smooth out some of that inflation that we're having in the economy. And the Federal Reserve has indicated that they are very committed to doing that. So what we're experiencing now is just really the beginning of that cycle that'll hopefully take care of some of the inflation that we've seen.
Okay, that's a great explanation. I appreciate that. And so particularly, they've definitely jumped in the past week because of the Federal Reserve. So in your mind, how do you see this moving forward? I know we can't predict the future, but, you know, is this our new basis for rates for the time being? Is it going to get worse? Are they going to get higher? What do you think?
Yeah, so the Federal Reserve, they control short-term interest rates. So when you think about the rate that you might pay on a credit card or the rate that you might pay on an auto loan or a home equity line of credit, the Federal Reserve is going to directly control those interest rates. Now, as they raise short-term interest rates, you know, long-term rates, things like mortgages will kind of come along for the ride. And you know, the Fed is expected to raise short-term interest rates. You know, they've stated somewhere by about another 2 to 2.5% through the course of this year, and then likely even some further increases as we move into 2023. As they move those short-term interest rates up, you know, we'll see long-term rates move higher as well. I don't think you'll see necessarily, you know, if the Fed moves 3%, I don't know that will mean 3% on your mortgage. But, you know, today, and, you know, this is kind of for your average 30-year fixed, I think Freddie Mac's data has us in the 5.3% range based on the info they released yesterday. It wouldn't surprise me to see a 6.5% or a 7% rate over the next 6 to 12 months.
Okay. So do you find that this is the time or this is a worse time to look into something like an ARM, to look into something like a shorter term 15-year loan? Or what do you think about other types of products besides a 30-year?
Yeah, that's a great, as far as ARMs or adjustable rate mortgages go, those in an or like over the last couple of years, they probably made up less than 2% of total mortgages. I think the most recent data I saw on ARMS was that they were right around 14 or 15%. I think ARMS can be a great solution for the right situation. I don't know that I would recommend my first time buyers, hop into a 5-year ARM, just, with the future being a little bit unforeseen as far as what rates are going to do. But we are seeing some of the buyers now are looking towards like a 7-year ARM or a 10-year ARM. Those are loan options that give you a reasonable period of a fixed rate prior to them becoming adjustable. And so if you understand how long you may plan to be in the home, if you understand your kind of your risk tolerance, and understand what the rate can do at the end of that 7 or 10-year period, I think it can be an appropriate choice for the right borrower. A lot of folks are looking at points. Points are real common. I know you've been getting some questions. We talked a little bit a bit ago, and I think points can be a strategy, especially if you started your search 30 or 60 days ago, and you've seen interest rates moving up as you've been out looking at different homes and trying to have an offer accepted. If you want to find a way to kind of get that payment savings, get back to where you were maybe 30 or 60 days ago, the idea of paying a point or 2 points could make sense to bring the rate down. A lot of it's about how long you plan to be in the home. Right. If you view it as a home you're only going to be in for a year or two, probably doesn't make great sense. If it's that forever house.
At what year do people usually break even when they purchase points? And for those that still aren't totally sure, you can pay a little bit more upfront with your closing costs and actually pay to reduce your rate, which would decrease your monthly payment. So at what point, what's that break even if I was trying to decide between putting the money into that?
Yeah, my advice is usually I like to see a break even less than 5 years. Ideally, if you can get it down to 3 or 4 years, that's great. But 5 years is kind of the number that I say, hey, if we're going to get our money back within 5 years, and we view this home as a property that we're going to be in, until the kids get out of school or until we're ready to retire down to Florida or out to Arizona, I think buying points and breaking even in 5 years is kind of the value proposition I like to see.
Okay. And then that's just something that's up to the individual borrower just to run those scenarios by you, as that's going to change from person to person, right?
Yeah, no question. We're showing really everybody we talk to in current market options with no points and, options with 1 or 2 points, just to give them a sense of the payment savings that's available.
Okay. And just really quick, back to that 7 to 10 year or 10-year ARMs, what are you looking at in terms of a savings on interest rates?
Yeah, so we mentioned Freddie Mac's data was right around 5.3 on a 30-year fixed. A 7-year ARM is probably going to get you somewhere closer to the mid 4s.
Okay.
And a 10-year ARM is probably going to be high 4s or right around 5%. So, somewhere in the neighborhood of 0.75%, maybe 1% in interest rate savings is available on the ARM products.
Okay. So for some people that know they're just in Columbus temporarily, that could be a really great option if they're willing to take that risk, essentially.
Absolutely.
So my one of my last questions really is, so we're not used to in the past few years for rates being this high, but historically these are still low, right? Yeah. How would you kind of rank them, in the past of how are these rates in general?
Yeah, if we look back over about 50 years, so the average mortgage rate over the last 50 years is somewhere in the kind of the mid 7s. So when you think about a rate in the 5.25 to 5.5 range, historically we are still below 50-year averages. And at the end of the day, when you think about interest rates and whether it's the right time to buy and get too concerned about some of those things, the most important thing is being able to afford your monthly payment and being able to find a house that's a great fit for you and your family. And, if you look at a real estate investment over a period of 7, 10, certainly as you look towards 15 or 20-year time horizons, I think now is still going to prove to be a fantastic time to buy. And really, real estate in general, there's never a bad time to buy if you're looking at it over a long time horizon, especially with what we're seeing with things like rent prices and some of the other increasing costs. You do get to lock in a rate whenever you buy a house, so it's a guaranteed fixed cost in spite of what inflation may do over time.
Absolutely. I think that's great advice, and great advice for someone wondering if this is the time. Or I hear a lot from people, do I just sign my lease for another year and hope that this all kind of calms down? In my professional opinion, I don't think that too much is going to calm down, because our biggest issue is inventory, and that just doesn't fix itself overnight. And I know that the rising rates are a little bit disheartening for some people that maybe have been looking for months and months, and now all of a sudden what they can afford has changed slightly. But I agree, it's still a good time. It's still going to be a good time to buy. There's still that demand out there. And I also have been encouraging people too, if they have gotten a pre-approval in the past few months, reach out to your loan officer, whoever that is, have them look at the numbers and just make sure that you're still approved for that amount, because for some people I'm hearing that it's really affected the price of the home they should be looking for.
I think that's great advice, Laura. If somebody started their search back in January or February, March, and they haven't connected with their lender, now is definitely the right time to do that, just to make sure they're still looking in the right price range.
Yeah, absolutely. Well, thank you so much for this. I know this is just a hot topic on people's minds, and I'll give everybody your information to get in touch with you, or you can get in touch with me if you have questions for Jason, you've thought about buying and maybe we're going to put it off. Again, interest rates are definitely something that's going to be different person to person and buyer to buyer in your financial situation. So that's what you are the best at, is looking at someone's financial picture and really giving them good advice on how they should be moving forward based on their goals. So I appreciate that about you, and always helping me teach people what they should know right now. And so thank you so much for your time.
No doubt. Thanks, Laura. I appreciate you having me.
Thanks. Have a good one.